Hello and welcome to BQ Prime. Joining us today is Mr. Sudhir Chaturvedi, President and Executive Board Member at LTIMindtree. He is joining us after the company's fourth quarter results, where revenue was up marginally sequentially, but net profit was up more than 11%. Profitability was robust at 18%. Welcome, Mr. Chaturvedi. First of all, congratulations on the results, given the environment we are in. But we are seeing some pockets of weakness. Can you give us some color on how your business verticals grew in the March quarter?
Sure. Tushar, thank you, and always a pleasure to be on BQ Prime. This year, FY23 for us, just to give you an overview, we ended the year at a constant currency growth of 19.9% year on year and 17.3% in reported currency terms. The quarter four as well, we've had good growth of 12% almost year on year. And what we saw in quarter four is essentially what we had also guided for in quarter three, that we were seeing that clients were being cautious about making spending decisions. There was the slower decision making that we were seeing. And we also had certain clients who had hiring freezes in this quarter as they reviewed their plans for the financial year. It was limited. I think we still had growth in all our verticals except for high tech. So our banking and financial services and insurance business grew, our retail and consumer goods business, our healthcare life sciences business. So all of these businesses were up.
Your BFSI business grew, especially when the US market is in the midst of a banking crisis. How do you explain that?
Yeah, so our BFSI business actually grew 2.6% quarter on quarter. In fact, if you look at a YOY basis, in a full year basis, FY23, in constant currency terms, our BFSI business grew 25.6%. So we've seen strong BFSI growth. And there are three reasons why we continue to be bullish about BFSI at LTIMindtree. Firstly, we've got exit momentum. We've had 2 strong years, so that itself gives us exit momentum. So that exit momentum itself, if we maintain it, we will see some good growth even in FY24. Secondly, the clientele that we have, we work with some of the largest banks in the world. In fact, 12 of GSIBs in the world, globally, and the portfolio is truly global, right from each region, whether it's Australia, it's Singapore, it's India, it's the Middle East, it's Europe, obviously, and the United States. We have clients across the board, and these economies are performing at different levels. So we've got broad-based sort of large clients in banking and insurance. And last but not the least, I think the work that we do there is a lot in the core. So we work in governance, risk, compliance, trade, treasury, in claims, policy admin, so core is always a resilient area of spend. The thing that we are seeing in the sector is that slower decision making in certain hiring freezes. We expect that to start to ease towards the end of Q1.
Okay. BFSI, if I may say so, now has an outsized contribution to your overall revenue at 38%. You are very bullish on the BFSI business. It's grown more than 20% in FY23. You have grown in a weak quarter. Do you think an outsized presence or outsized contribution of BFSI can be also a deterrent in case this particular banking crisis deepens?
Well, I think, firstly, banks and insurance companies are the largest spender on technology. So, they are a natural segment for tech spend. In fact, quite a few banks would describe themselves as tech companies in some form or the other. And therefore, I think this is always going to be a sector that is where, we are very proud of the fact that we are strong in this sector because we bring a unique combination of domain and technology expertise. Having said that, our high-tech sector crossed $1 billion in revenue this year, for the full year. So on a full year basis, high-tech has also done well. It grew 15.8% in constant currency terms year on year. We are seeing a strong performance in our energy and utilities vertical, which is again a traditional strength of LTIMindtree, because their commodity prices have been pretty stable, so there's resilience there. Retail and consumer goods bounced back this quarter. In fact, if I look at the demand situation as well as our revenue, our outlook that we have, we're seeing broad-based growth across verticals and across regions. What we and there's the thing is we've got a strong order book. We just announced a $1.35 billion order book, which is 20% up. On based on Q1, on Q3, and that shows momentum. What we are seeing is that there is slowdown between the conversion of the order book to revenue. That's really what we are.
There's a slowdown in the deal-making process. We want.
Yeah, in the decision-making process, as many more people get involved in decisions, there are more questions asked on the business.
So there is a bit of caution among clients that you're witnessing.
Absolutely, there is boardroom caution amongst clients across the board, and that translates into caution in spending.
Okay. You mentioned about the high-tech business at $1 billion. Does it include cloud computing as well? I'm asking this because we have news coming in that Amazon, with its latest quarter results, is still indicating some weakness in its website, AWS. So does that in any way impact you as well?
Actually, cloud, now for us is something that is almost every project that we do, whether it's on the efficiency side of the house or it is on the transformation side, has a cloud element to it. So cloud is all pervasive across the board, and we made major investments. In fact, we actually created 3 different business units focused on AWS, Azure, and GCP, and another cloud unit focused on the other what we call disruptive SaaS players. So we've set this up because we invested ahead of the curve on this in a significant way, both in sales and delivery, and that's paying fruit. What's important to look at from a cloud perspective is the growth that the hyperscalers like AWS have seen in the last 2.5 years. That itself leads to a requirement for that all the things that were sold to move to the cloud have to be consumed in the cloud. So we see a consumption wave. So there was a wave where people were looking to move to the cloud. Now they're looking to stay in the cloud and leverage the cloud to its maximum potential. And that's where we see opportunities. And I think what AWS is also referring to is that shift from that lift and shift to consumption. And actually, that is what I think suits the hyperscalers, because consumption is what will make them stick to a particular hyperscaler. That's right.
Yeah. Okay. So how do you see the next couple of quarters panning out for you now? You mentioned that there is a delay in decision making. So do you think you'll be back to, say, substantially high revenue growth for the next 2 quarters?
Well, we have said that we will look to do double-digit growth even in FY24. We've also guided that our margins will return back to the range that they used to be. There's the EBIT range of 17 to 18%. We remain confident about both. I think that, as I said, right, we've got tailwinds from a current the trajectory. If you're entering a financial year with almost 20% constant currency growth, you've done something right in the previous year. You can carry that momentum into the next financial year, which we will have. Secondly, as I said, we've seen good order intake. We've also seen broad-based our deal-making activity. Pipeline continues to be very strong. So therefore, it's really about that conversion of deals to revenue cycle, which we can't do much about slower decision making. I think the hiring freezes also are a factor that do have an impact on us. But we, as I said, our forecast is, speaking to our clients, that we will start to see this ease towards the second half, towards the latter half of Q1, which means that we should be able to pick our growth trajectory back from Q2 onwards and deliver that double digit, which we still think that given the industry environment, will be in the industry leaders quadrant for growth.
Okay. Would you like to peg do you want to give a revenue guidance? Maybe some number you're saying double digits?
No, we don't give a revenue guidance. Okay. So, but I think we will endeavor. We've always believed in being a profitable growth company. So we are well on that journey. As you can see, the bounce back on margins this time has been strong. We've also clear the integration is complete. This has been the velocity of integration has been phenomenal. If you ask me, in 6 months, from November to April, we've actually merged the two companies.
That was actually my next question. How are the synergies of LTIMindtree now playing out for the combined entity now?
No, so the first thing is to get everybody on common systems, processes, platforms, so that we can really start to see, what both companies, the entire strengths of both companies, and then start to cross leverage them. So that process is now complete. We've actually launched 4 sales transformation programs as we speak. I'll just touch upon one, which is our Focus 100 program, which is across both the erstwhile companies, where we've seen, just from a proactive basis, we used to have on our own, erstwhile LTI had 5 service lines, erstwhile Mindtree also had 5. Now together we have 9 service lines because there was very little, there was not much overlap between the 2 companies. So that itself gives us a very strong cross-sell, upsell opportunity. And we're already seeing the deal sizes ticking up. The second area is from a large deal perspective, we've seen deal sizes ticking up, which is also reflected in our pipeline. So those combinations is where we will see the synergies coming from.
From that to my final question, let's talk about people. So give us some color on how the attrition has been. Are you looking to go back to pre-pandemic levels, lows of pre-pandemic levels, the attrition rate now? What has been the utilization level? Are you looking to hire more people in FY24?
Yeah, so I think attrition dropped very sharply for us in Q4. We are at 13.4%. So we're actually back to kind of pre-pandemic levels from an attrition perspective in Q4. Full year attrition is still high because we had 24% attrition in Q1. But we are seeing that certainly easing. As I said, as the integration is complete, we also have a clearer view on the current, resource capacity that we currently have within the organization. So our current focus is to make sure that we maximize or increase the utilization from where we are currently from our existing workforce. And I think keep attrition in that 12 to 14% range, which we've traditionally had. So that's what our current focus is. As demand picks up, we will seek to resume the fresh hiring. But as you can imagine, we at 85,000 plus people, as the 2 companies combined, we had some good capacity already within the company.
All right. What about the utilization levels right now?
So utilization is just over 80% right now, but that's why we see a headroom to take that up by a couple of percentage points at least. Also, what we're seeing is that from a fresher hiring perspective, that process we will start towards the second half of the year.
Mm-hmm. Okay, so this is the first time, I think the first appraisal cycle after the LTIMindtree merger. So how much can the employees, the 85,000 plus employees, expect to get after the merger that has come in now? The salary hikes expectations, how much will they expect? Can they expect?
Yeah, well, I think, if we look at what has happened from a salaries perspective, actually, there have been, in fact, you might recall that we had actually given 2 hikes during the pandemic time itself. And thereafter, there have been periodic, there has been, as we all know, wages have been on the up across the board as both for people who were new hires as well as people who were within the company. So there have actually been multiple cycles of wage increases that have happened. So this time around, we will seek to actually, it'll be a more measured approach. We will, we'll be careful about how we do this, especially as we have to make sure that our priority is to make sure that that LTIMindtree is the best place to learn and grow, and for that is to bring the opportunities for exciting work. So that's what we'll remain focused on.
That's great. Okay, thank you so much, Mr. Chaturvedi, for joining us today. It was great talking to you. Thank you, viewers, for joining us today. This is Tushar for BQ Prime.